Netta this morning sat down with the Deutsche Bank CFO James von Moltke. Said the lender expects to see strong momentum across all business units and that to continue into the new year.
Well, look, on the top line, revenues grew by 8% year on year relative to what was already a reasonably strong fourth quarter of 2020. And we do feel that the underlying momentum was there in all of our businesses. It was quite visible in the corporate bank in particular, where revenues were up 10% year on year. And also there's good momentum in our private bank. In the trading businesses, naturally, we had some impacts from the disrupted markets that were prevalent in really November and December. But we think we navigated through that reasonably well. And we see, again, the underlying trends still carrying forward into 2022.
Oh, here she is. Annetta, like all good journalists, you're very sceptical on the ability of the company to achieve return on tangible equity. Why the scepticism?
Well, actually, I think the market was very skeptical, not just me, that they can boost revenues and at the same time cut costs, which they had to do. But it seems that they are actually on a good way to achieve that 8% return on equity target. But of course, the general market environment is helping as well. That's what James was saying as well, that we are now heading into an interest rate hiking cycle is helping the bank tremendously. But also all the volatility which we are currently witnessing and most likely will be here to stay also for the remainder of, at least for some weeks or perhaps months, is also helping the trading side of things. But perhaps we listen in of what James had to say about consolidation and also their targets.
We're reaffirming our targets for 2022 of 8%. The most important are at 8% group ROTE and a 70% cost-income ratio. We've been essentially preparing the company now for 2.5 years through the transformation efforts that we've been working on and the cost of which we've now almost fully booked to get ready for what I call internally a measurement year of our performance against those targets.
So once Deutsche Bank, again, is on a very solid footing, are you looking into M&A activity? Because we are clearly waiting for more consolidation in the European banking industry.
Look, Annetta, I think our answers there will remain pretty consistent. We've been working to improve Deutsche Bank, to execute on the transformation, and frankly, to deliver on the promises we made to investors back in July 19. We've come a very long way. Including the announcement yesterday afternoon of resuming distributions to shareholders, which was an important milestone for us. Do these things set us up, I think, better to participate in consolidation in European banking? I think so, absolutely. And do we think that the industrial logic is there for that consolidation to take place? We continue to think so. But the time and the combinations are hard to judge, and we'll stick to the answers we've given in the past.
Talking about the dividend and share buyback program, why did you opt for share buybacks instead of hiking the dividend further?
It's always going to be a balance between dividends and buybacks, and ultimately also the direction of travel on the dividend. We think we've made a good and balanced judgment reflecting where we are today. And it's, I think, a good first installment towards the 5 billion promise we made to shareholders. Of course, if you like, corporate finance impact of repurchases are powerful when you're valued where we are. And hence, of course, that factored into our thinking about the balance of dividends and repurchases.
We need to talk a little bit about the macro environment and geopolitical risk as well. The ECB is warning European lenders that sanctions could hit their businesses, sanctions on Russia, obviously. How much would you be affected as Deutsche Bank?
Well, look, we're watching these events very carefully, as everyone is, and we're preparing in a variety of ways across our businesses. Frankly, our Russia activities are relatively small, and so the impact is, of course, manageable. But both from a financial and operational perspective, we need to be prepared for whatever government decisions lie ahead, especially on sanctions or other measures.